So we move on to our afternoon agenda. I hope you found this morning useful, a range of topics, but ones I think are all relevant to what you may be doing either as a industry practitioner or as a regulator or a supervisor. So I hope you've all been gaining quite a lot of insights, and I can tell from the conversations that were going on that there's lots of good exchange going on, and people making contact with each other, which is a large part of what the RCG is all about, and sharing knowledge. So please continue with that. So this afternoon we're going to talk, and I'm going to start off with a presentation about the paper that Colin mentioned around the public credit registers, and I'll explain a bit more about that in a second. And then I thought it would be useful just to have a panel discussion around the paper and some of what we're seeing in different models around the region. So I'm going to, I think, is my first slide up? Thank you. I'll be asking, after I've done my presentation, I'm just going to ask Valdemir from, oh, come back, go back one. See, they've had too much lunch as well. Can we go back one, please? We'll get there in a minute. Anyway, I'll be asking Valdemir from CIC to join us. Nope, it's not going backwards. Okay, don't worry about it. I'm the Deputy Governor from how do I pronounce Sokeng? Beg your pardon, thank you. Apologies. From the National Bank of Cambodia to join us as well, if we don't all get struck by lightning in the meantime. And obviously Peter Sheerin, who those of you know very well, Peter's had a lot of experience working with the IFC around working and setting up credit bureaus and working with central banks. So I thought Peter's views on topics would be quite useful. So we'll have a little bit of a sit up here on that. Then we're going to move into the session on identity. You may wonder why we're talking about identity. Well, we're talking about identity because it's pretty critical in the digital world that we're moving into, even more critical than it was in a more manual world. So, and it's something that the ICCR hasn't necessarily talked about and done any work on, but I'm keen in my deputy chair role to test through this meeting to feedback on identity, some of the issues, and to maybe take that to Cape Town, the plenary in June, and see if we can't think about doing some work on it, because it's becoming increasingly important. And as practitioners in the business information space and in the consumer information space, I'm sure as bureaus you will do more and more work on identity than you have been doing. And I'm sure you would want to go and talk to a regulator about that and what you're trying to offer. That may require some regulatory changes, that may well just require some regulatory approval. So if we're talking about it now, we're understanding a bit more about the concept, hopefully make that conversation easier, because it is a key role for the credit reporting service providers. And by the way, CRSP that's what it stands for, if you were a bit confused about the acronym earlier. That's the official term for business information providers and credit bureaus. So let me go again with the slides. So let's try the first slide. You only have that one. Have you got my presentation then? Oh, there we go. Okay. I'll start. Okay. So what we're going to talk about really is just this paper, as Colin mentioned, is still going through peer review. So you are getting an advanced sight of some of the recommendations and considerations that are coming out of this paper. As you can imagine, this paper is somewhat provocative in the sense it was, as you'll hear in a minute, was as a result of some of the changing role in which public credit registries are operating. And I think we felt as ICCR to acknowledge that and to do some research around the landscape and how these models operate. And as you'll hear, the ICCR is totally agnostic to the models. All we're trying to do with this report is to highlight the opportunities and risks of different roles. So it's a more a research and landscape paper, there are a few little recommendations out of it at the end of the day. And the overall recommendation, and always has been since we started building the principles in 2009, is that there is coexistence and a need for both in most countries. So let me just go through the report, and then, as I say, we'll have a panel discussion up here with our three guests. So a little bit about the background in terms of that. I've given you some of that already. The traditional role of PCRs, the evolving role of PCRs as it's being seen. Some of the operating models, which as Colin mentioned earlier, are changing, and some of the emerging issues. And then the ICCR sort of interventions and some of the views around the scope of the working paper. So, as I mentioned, there is an emergence of a new breed of PCRs, public credit registers, and it is seen that they do sometimes have a broader mandate than the traditional PCRs. Traditional PCRs have probably been seen as organizations that collect data for managing systemic risk and reporting internally, and that tends to be the role that is the traditional one. I think there is now more moves to PCRs being more proactive in the credit reporting system in terms of managing data flows. We commissioned a study into as I say, the landscape of the changes and, as I say, its implications on credit information sharing models. The purpose of the paper is not, as I've already said, to offer a view on any type of model being preferable. It is, or to actually proffer any recommendations. So we're not saying that one model is better than the other. What we are doing is just laying out the landscape and highlighting, as I say, some of the opportunities and some of the issues that may well be there as these models continue to develop. So traditional role of PCRs, I've covered this already. They are historically established, normally within central banks, to collect and complete information for regulatory sort of systemic oversight. They were intended to normally collect data on large credit exposures. So if you look at a number of the traditional PCRs in Europe, for example, they have quite high threshold limits as to what data they will collect from financial institutions. And it's interesting there that by 2019, 122 countries reported having established a credit registry. That's some of the World Bank analysis. So they are quite prevalent around the world. There is obviously a strong understanding of the ability of PCRs to perform a role in the whole, credit reporting financial ecosystem. The role has changed, and it did change quite significantly. In fact, it started changing in a number of places with the crisis in the subprime crisis around about 2007, 2008 in Europe. It didn't necessarily hit the Asia Pacific region too much, but it did start changing then, where people like the European Central Bank were actually helping economies out by what we call bailing them out with some financial assistance. And there was a lot of requirement then for countries who didn't have PCRs to implement them, and also the PCR role to be slightly different to the traditional one. So I'd say the key drivers, there was the global financial crisis, 2007, 2008. We obviously had COVID as well, which had significant impact. There was a lot of these crises have actually demanded better and more detailed macro-prudential supervision. So more granular detail, because I think the subprime crisis and that was seen, there was a lot of discovery that a lot of data wasn't necessarily available to monitor some of these events. There were obviously perceived market failures. I've just mentioned that one. There have been technological innovations, which I think has enabled central banks and other people running PCRs to be a little bit more dynamic. And of course, we've had the proliferation of a lot more data, and there's also a public policy driver as well. So new mandates and expanded policy objectives have been quite common, and they require more data. And as I say, that's where you find that the thresholds actually dropping, And also you find, wanting to understand exposure, not just at corporate level or large consumer level, but quite in the micro level basis. And obviously they have been driven a lot of the PCR work and some of the regulatory burden of submission of data to multiple credit bureaus. What do I mean by that? Well, I think some of the regulators have seen the fact that where you do have multiple credit bureaus in a country, you don't necessarily get all the lenders sharing data with everybody. And where you're trying to have a complete comprehensive view for lenders to assess future credit, you do need to have data supplied to everybody. And it has been difficult to actually at times persuade data providers to actually provide to everybody. And so you get fragmentation of the market. And I think there's been a view that you need to force the market to do that. And sometimes that is best done by collecting the data from a PCR perspective and that data being fed out to the PCBs. And we can probably talk a bit about that. I think the CIC is one of those particular examples we'll talk about later. And obviously the technology has changed. So, whereas it's all, as I'm sure, as business information providers and credit bureaus, how much it takes to run a credit bureau and develop a credit bureau. But technology is changing that. And I think that's enabled some public authorities to think that it should be easier to collect more granular data. So this is the sort of a slide between the traditional and the new breed of PCRs, as we've seen, taken very much from the sort of analysis that we've done in the report. If you look at the mandate, traditional PCRs are fairly narrow, as I've already mentioned. The new breed are tending to be expanded and more broad in terms of data and in terms of role. Whether that is mandated through regulation or whether that is just something that the central bank have decided to develop themselves. So you will find that on ownership and operations, you normally have them mostly owned and run by authorities in the traditional case. But you are starting to find some PCRs actually being a private-public partnership. So you will find that. Everybody's obviously looking at the rain out the window at the moment as well. But in the credit referencing model, mostly so, as it says, they're mostly solo or coexistence. So what you would tend to find is you'd have a sole PCR only rather than a PCB, or you'd have one PCR, one PCB. Now you've got this mostly hybrid model. So you have got some PCRs also providing credit reports as well as, and it mentioned this morning, David mentioned with the PCR in Brazil, for example, the number of reports that they're providing. So you do get some hybrid models developing. You do find that traditional areas of the limited sort of coverage is now expanding, as I've covered before. Thresholds I've covered before as well. And service offering, you are starting to see some actual sort of analysis and scoring of the data coming through as well. Not that prevalent, but there is some talk about scores being provided under the PCR. And obviously you've got customer bases. Traditional PCRs tend to be really, because of this sector they regulate, coming from financial institutions, but you do have now those PCRs also looking at possibly other data outside of financial institutions. And the coverage-wise, obviously, it's mainly a national. Traditionally, there are some cross-border. The cross-border really is very much more in some developing regions. There's a lot of there's talk about, for example, and I'll cover it later in the slide. In Africa, there's an organization of the African central banks which is now sharing data and creating a sort of large PCR for the sub-Saharan region with Africa. So let's just quickly cover some of these models. So obviously we have the solo model, as we mentioned, which is where the PCR is the single credit reporting service provider. In some countries, as it says there, they operate as that single provider and provide credit scores. The hybrid model we've talked about, which is where you have PCRs and PCBs. Sometimes in those models there is a competition or there is a dual supply. Let's not use the word competition, let's call it dual supply. And then you have coexistence where you tend to have probably more defined roles. So you have the PCB really servicing the general financial institutions in terms of inquiries, and they have the PCR doing the systemic role. I think that comment at the bottom is quite relevant in the sense that you have also, as I mentioned earlier, these regional databases that are being created. The European Central Bank created AnaCredit a good few years ago now, and that was very much a case of pulling together data from all of the public credit registers around Europe to actually create a rather large database for monitoring purposes. So let's have a sort of fairly brief look at the opportunities and challenges, as I mentioned, around this impact it has on credit reporting. As I say, this is really just a landscape report. This isn't looking to say one is better than the other. And as I mentioned, we've done this report really where if you are a regulator and you're thinking about the role of a PCR and the role of a PCB, this report is designed to help you with that decision-making process. So you understand the different models, you understand the different pros and cons. It's not about actually saying one is better than the other. And I need to continue to stress that because, as I said at the beginning, we have no view as the ICCR on what is the best model because different models fit different countries. So from an opportunities perspective, democratization, that's a big word to say after lunch, of access to data. Basically, it's really about, where if you do develop the sort of central collection of the data, it ensures that the data is actually accessible by all of the bureaus. And it can be argued that greater data will improve access to finance. It probably gives more, with more data and more granular data, it gives more effective oversight. I think that's understood. And it may well lead to advanced analytics of data, so you can understand a bit more about what is happening. And obviously it's connected with the level of data, but you can get obviously more availability of more comprehensive data and innovative services. I somewhat challenged the last one, but in terms of innovative services, but I think, there is that opportunity, as I say, if there's more data being provided. Potential challenges, it is quite clear that there may be a situation where the private sector could be crowded out. It may not be a feasible business for a public credit bureau, private credit bureau, sorry. Private credit bureaus are there to innovate. They have a history of innovation, of product development, and supporting lenders as they move forward. If you don't have that private sector, you may not get as much innovation as you would like or expect, which won't help the financial services sector deliver what it's trying to deliver and trying to keep up with the changes in demographics and requirements. There is obviously a compliance burden to data providers. So obviously it tends to be putting a lot more compliance burden on data providers if it's going to a public credit register. And excessive competition might affect quality of service. Yes, possibly. Where you do have competition, you could find that service does get slightly impacted. So, considerations. Careful choice of word, considerations, not recommendations, but considerations. Evidence points to, and there is some analysis done of this in the past, that existence of both traditional and new breed of PCRs is continuing to happen. Most of the traditional PCRs are playing complementary roles and no one size fits all. So there's a range of different options there. So that's the considerations when we've done our review. The considerations need to be considered based on context and mainly apply to new breed of PCRs. So what we found, of course, is where there is a fairly traditional developed model, there is this compatibility and there hasn't been much movement. So, for example, in Europe, where the PCBs and PCRs have operated for some time, it's quite clear the roles. There isn't a much shift going on. What I think we are seeing is this shift is occurring in the more developing areas, where in fact you may find, for example, that regulation, and it might be easier to regulate and the creation of a PCR to ensure collection of all the data, and it might be the easier way than trying to actually get the industry itself to work with regulators. So there are some of those issues around. Lots of detail on these ones in terms of considerations. I'm going to just read the top line. I'm not going to go into the detail, but obviously, one of the considerations is that if there are perceived benefits of having both. So there is a consideration about making sure there is a level playing field, but that will be down to regulators as to their objectives. But we do recommend that there is a role for both, and therefore there should be, as a regulator, you should ensure that there are level playing fields, and that you're not necessarily favouring one against the other. Level playing fields create innovation, and that is good for financial inclusion and supporting access to finance, as I say. Address any crowding out that may occur. Crowding out risks do and could obviously happen. And so we're asking regulators just to monitor to make sure that they don't inadvertently crowd out a PCB and the benefits it does offer. And one of the other recommendations is about collaboration. So the two can work together. There can be an exchange of data between the two. I've referenced again the Central Bank of Brazil's model, where in fact they do have a data flow between the central bank and the bureaus. And that's very effective in terms of supporting both roles. So there is the opportunity to collaborate, and that I think is something that should be considered as well. So it's not either one or the other. Sometimes you can get benefit from both. Obviously, what we do recommend, and it is a fundamental principle of the general principles that were established in 2009, is that we recommend in credit reporting systems that there is the most comprehensive data is collected as possible. And so that key consideration 4 goes without saying. But we are saying if you are going to set up a PCR and not have a PCB, then the PCR needs to think about collecting full range of data. So not just looking at bank data, but also, as we talked about beginning of this session today, about alternative data, taking on that on board as well. Data exchange, we've talked about. I think there is a role for exchanging data. And then obviously we have the streamlining data submission. So if you are going to require data to go to both, then it would make sense to try and streamline that so that you don't have too much burden on the financial sector. Now sometimes that streamlining is put in place via supply to a PCR and then out to the PCBs. But we're not going to say which is the right way, but we just want to point out the fact that if you are going to run a PCR and a PCB and you're asking a financial services organization to supply to both, that doubles up the complexity and the timing that's involved, and that can hinder the development of the financial services system. And leverage advanced data analytics. This is an interesting one. I think obviously it goes back to the point that if you are going to collect this data, it can be very useful, but you need to have analytics to be able to work that data. That's the blank screen, which means I'm at the end. So I don't know if anybody's got any questions about that. I saw a few concerned and furrowed brows coming through on that, and I fully understand that, because it was an interesting topic when we took it on board. We have had some very interesting dialogue with central banks as we've gone through this process, and we've had to be very clear about the fact that there are distinct roles, and and you will see in the report when it comes out that we're very, very clear about putting words in like where relevant and where applicable, because there are models in existence where some of these recommendations don't apply. As I mentioned, in Europe, there's a very strong definition between the two. And so it doesn't necessarily apply some of this, because none of these changes are happening they have no intention of changing. But obviously, in the more developing world, we are aware that there are these discussions ongoing. So that's why I think that's why we've done the report. That's why I think the report is important. And I stress one more time that it's important that you have the full facts to hand as a regulator when you're making these decisions, so that you make the optimal decision for your own country. Have I warned anybody up for a question? Leo, I knew you'd be there. We can have a mic here. Oh. Mention who you are. I know you have already, but do it again.
My name is Leonardo from the CLIC, the Indonesian Credit Bureau. There's a lot of bullet points in your presentation that speak of the role of PCRs in supporting lenders, where they deviate from their traditional role of supervising the financial market and the financial industry, especially since all the neo-lenders are moving away from the conventional banking market, and a lot of the lending is happening outside of the purview of the central bank, possibly with the backing of the banks itself. But there is a lot of deterioration of the credit quality, at a country level. And what is the inputs provided by the report for the central banks or for the public sector to strengthen their capability to do more proactively financial supervision, as opposed to supporting lenders in the disbursement?
It doesn't really go to that. I mean, there's probably more relevant is a paper we did some time ago around oversight. And I think your point you're raising is a good one, because obviously there's a fragmentation of finance now. And in some cases, like buy now, pay later, for example, it's not falls under any regulation, or neo-banking and all the rest of it. So I think we need to, as the ICCR, come back to the oversight point. And I think this is probably more talking about the particular PCR. That point, I think, is more relevant to say, when we issued our guidance on oversight, I think we need to be bringing this back in, this recent developments, and refreshing that paper to say, that there is a need to be aware of these. And this is where in some ways, it's not quite the same as the alternative data paper, but it's actually saying, the landscape is changing. And I'll take that away, because I think that's, and we always look at the papers we've issued and understand whether they're relevant or not and review them. And I think that particular aspect, if I've got it right, is where we probably need to reissue sort of oversight guidance to say, it's the same as, buy now, pay later data being provided.
The credit bureaus were conceived as the early filter to ensure downstream financial stability. If you do a better job upstream in screening the prospective customers and bringing on board good quality customers, you find yourself as a regulator having an easier job in maintaining the stability of the financial market, as opposed to then using the PCR vertically to do sort of a second layer of surveillance, after the loan is issued, and monitoring the quality of the bank's portfolio.
Yeah, I mean, I think if you look at some of the buy now, pay later and whatever, I would struggle to see how PCR would be able to pick that up. And I think that's why we recommend.
That's why it was a symbiotic report between PCB and PCR.
Yeah, I mean, I think that's why I think that's it could be one of the threats, I think, of just a PCR, is that you miss these systemic sort of potential systemic bubbles coming from buy now, pay later, and if you're not getting that data reported into the PCR, and if you only focus on regulated financial institutions as the reporting entities. So I think that's where that's where it has to be changed, and I think that's something we'll take away. So I think this whole subject around, we have been monitoring buy now, pay later, and we've had several presentations on several ICCR plenary meetings about it. So it's on the agenda. And we need to, I think we're pretty close to saying we need to do some work to clarify how, how oversight happens. Does that help? Good. Okay. I'm going to get our panelists up, actually, so I just need to get some chairs on, if you don't mind. But I'll take a question while we're doing that, if you don't mind the removal team working away. Elias, We'll get you a mic in a second. Can we just get a mic to? Can we get a mic to Elias? Thank you. Oh, you've got that one there. Yes, of course. Two will be fine. Two will be fine. Okay, so can I ask my colleagues to come and join us? And Elias, your question while they're joining us. Have you got your mic still? Struggling with mics this morning. Can you give?
I remember that World Bank has a recommendation from existing recommendation from credit reporting that end up, recommending that if you don't have any credit assessment, so it's really the central bank should play, a role at least to have a evaluation. The second recommended model was about using the banks, they create an association and end up, creating a credit bureau. And the last one that I remember was on the best practices was to have the private sector, because the private sector will be, you can say, no bias, okay? Because if you have the banks, to some extent you have bias because you are creditor and so on. And the central bank also has a potential conflict, because if you supervise and you interfere in what you supervise, you may have a potential conflict, right? So I think we have discussed that in November, right, in Washington. And what you presented here is really a trend that the PCRs, they are providing services. And my point is, if you will review this existing recommendation with this paper, or because they end up conflicting what you presented here with what we have today in the World Bank, because they have different views, right?
I think those World Bank views are changing.
Changing.
So this is what this is saying. This is saying that there were those traditional lines in the sand. And this is saying, no, this is recognizing things are changing. This is why the report's being done, because those lines are shifting. Okay. So what we're saying with this report is that if those lines shift in the sand, it doesn't really matter or not. That's what we're saying, but we're just making people aware of it. Yeah. Because there are a lot of people picking this. There's a lot going on where people are just replicating models without necessarily thinking it through. Okay, and I'm not saying the cut and paste thing, but people just need to be aware of the pros and cons. Yeah. And that's why we're doing this. So so I think
in Brazil we work together. We complement each other. We don't have any problem. Okay?
Yeah, I mean Brazil is a very strong model about cooperation. So I think it's people should come and talk to David and yourself about that, because I think that we've always used that in the ICCR as a strong model. Okay, we're going to have a quick chat. Okay, we've got about, 20 minutes or so. So let me just, I'll come and join you in a second, but let me just stay here if I may. So I'm not sure how much people know about CIC, Vladimir, but I think maybe you want to just give a quick introduction and maybe reflect on what we've been talking about and how CIC works within that framework, or does it?
Sure. Yeah, we do. Thanks for that. Thanks for sending the paper. Very useful resource for us as a frame of reference. So I'm Val from the Credit Information Corporation of the Philippines. It says corporation, but we're actually a government entity. The government is the one that owns and operates our corporation with some private participation. We're created by law, and as a PCR, the National Public Credit Registry, we're the only public credit registry. By law, all entities that provide credit need to submit to us. So that counts BNPLs, finance companies, as well as the usual banks, lenders, online lending platforms. In terms of the model that we use, we fall under the cooperation model, I think, in that we have our PCR, we get all of the data, and then we have our accredited bureaus, which we call special accessing entities, who access data from us. Of course, they're allowed to have their own collections and their own databases. That's up to them. TransUnion does that. We're moving towards a model closer to the Indonesian model and closer to, that's why I said the report was very useful as a frame of reference, because we also realized some of the shortcomings and opportunities that we want to address, which is mainly we want to further the development of products and services of the PCBs, of private credit bureaus. So we're moving towards a model, what we call advanced tier, where we essentially, as the PCR, focus on enforcement, collection, and compliance, ensuring data quality of the submissions. But we let the accredited special accessing entities, or the PCRs, to do their own processing, matching. As discussed this morning, they can come up with their own products and services so that they can respond to the market quicker. Yeah, so I'll move on to the
Okay. I know I'm very interested to share your experience in the National Bank in terms of your working with CBC, because I know you have quite a good and special relationship there, because I want to just highlight that there is that opportunity to work together in terms of providing information, which I understand you manage within your remit. So I don't know if you want to just sort of give a little bit about how you work with the CBC and some of the approach of MBC as well, if that's okay.
Sok from the National Bank of Cambodia. So I'm not a banking supervisor. Basically, so the National Bank of Cambodia is mandated to like monetary policy or currency issuance. A part of that, we are also the supervisor of bank and financial institutions. So just a bit about banking system in Cambodia. We have commercial banks, specialized banks, microfinance institutions, leasing companies, and also at the central bank, we supervise the credit bureau. So basically, I would like to just briefly tell you about the history of the credit sharing information. So we are quite young because our banking law was adopted in 1999. So we're quite young, and at that time, because when the law was passed and then some bank was closed because they failed to comply with the new regulation, and 12 banks were liquidated and delicensed, and 19 banks were allowed to operate and continue in 2000, so just around 25 years ago. And back then, with among the 19 banks that were in operating, so one of the issue is about the credit information, because we do not have this credit sharing information yet. And starting from scratch, we have been working with Association of Banks in Cambodia in order to create and develop this credit sharing information. Yeah, and back at that stage, very minimum efforts that we can make, and also we collect only the negative information from customer and share among banks. And because our law of secrecy information of the clients, so then we could not do anything that much, and we have to make an MOU. We have to make an MOU between banks among those central bank, association and banks in order to share those information. And a few years later in 2006, we officially launched this credit information sharing. But still, it did not work very well because a lot of challenging issues among that one. And also we've got support from the ADB. And back then, when the ADB discontinued their program, so we need to seek more support from the other organization and International Financial Corporation, the IFC, supporting us and also help us with the regulation. And basically from 2007, our objective is to have a better structure credit information sharing, and among that we want to privatize this credit bureau. Okay, so and then back then we try to develop regulation that help us to make to launch the credit bureau, and officially we launched it in 2012. So as our colleague mentioned, this credit bureau is only 13 years old, so it's quite young. But one thing that the experience is that as the regulator, we try to develop, establish regulation that could help us to achieve what we want. And we have been working with partners like IFC and also BIA, also involved in 2009 in helping us because we want to do the cross-border, 2019, okay, sorry about that. Yeah, 2019, because we want to do the cross-border credit sharing information. So our law, our regulation does not have that. So we seek support. So yes, that's the short story of our credit sharing information system, that how we develop it. Yeah, so one thing is that, of course, as a young maybe a starter, so then we do not have a regulation yet. So first thing is partnership and cooperate with others that can help us. Second thing, what do we want? So for example, we want a good credit sharing information like CBC that we have today. So we need to overcome all the challenges, including the regulation issue, you know, that things that we have. And now I think we have been successful within less than 20 years of having this credit sharing information in place. I'd like to stop here, and if you have questions, so probably our colleague at Credit Bureau Cambodia has a better answer than I do. Thank you.
Thank you very much. I mean, I think that's the reason why I sort of build a panel like this. There are different models, as I've said, and I think the you know, the CBC MBC one is a cooperative model. It's a case of collaboration, you know. So it's and really not a case of putting regulation in place, but trying to work together to produce something, which I think is a good example. So that's very useful. Thank you. I mean, Peter, obviously you've had a lot of experience in creating bureaus, pretty much mostly around the world, I think, apart from Latin America and America. But you know, you've worked in times with, and you were working on the CBC project. But in terms of other things, I know you've come across some and had some really learned some things you don't do, things you do type of thing with when you're trying to set these up. So be provocative and find them out there, because I need to wake this lot up. So give them some good cannon fodder, as they say.
So thanks, Neil, and thanks the other panelists too. You know, certainly I've been around for a while, and what I have seen is a pendulum swing. And I think a lot of that is driven, some of it by the World Bank, the competition between the World Bank and the IFC, and you can't say that out loud anymore, but there was competition between the World Bank helping governments and the IFC helping the private sector. But, you know, establishing a public credit registry is not without risk. And I think a lot of regulators And the risk starts, in my view, by using restrictive legislation rather than regulation or guidance notes. And I can point out a number of models around the world where they have passed what was at that time reasonable legislation, and to get legislation then amended further on down the track when you try to expand your data access points and you need to go back to a parliament. I don't need to remind anyone in this room, parliamentarians and credit reporters are not good bedfellows, particularly when you think you're reporting their data. And if you're going to get good data, you need all the data that you can get your hands on. And of course, central banks are just one regulator when you're talking about data. There are insurance regulators, there are telcos, there are utility regulators, and they all defend their patch with as much vigour as they can. And certainly, you know, it doesn't matter whether it's the private sector or the public sector, the cost of IT infrastructure has fallen dramatically, and the cost of people that know what they're doing in a shrinking credit reporting ecosystem has gone through the roof. The pool of people that know what they're doing is shrinking. And when I look at the market, there are two things that we never say out loud enough, and that is data quality, or more accurately, the lack of data quality. And public credit registries, in my opinion, are not that great at cleaning up data. And some of that is driven by the models that lenders, regulated lenders, are compelled by legislation to share data. So it becomes a compliance issue rather than let's do something about the crap data that we've got so that we as lenders and society at large get a bigger bang for our buck. And the other thing I think we don't talk about often enough is governance. In the bigger sense, you know, how do we behave in this ecosystem, whether it's public or private? And one of the things that frustrates me is that as regulators, we protect ourselves to the hilt. You can sue a private credit bureau for doing something dumb. I've yet to see a public credit registry that doesn't legislate itself a complete ironclad protection against doing exactly the same dumb thing and being protected by law. So I'll leave it there.
Excellent. No clapping at the back, please. I don't want all the regulators suddenly moving out of the room. No. But I think, you know, this is part of what this forum's all about. This is to share these learnings, you know, and to learn from it. So, I mean, you were nodding furiously in the right direction for that lot. So,
Yeah.
So do you want to add on?
Thank God for legislation protecting the PCRs. But yeah, I agree. It's really hard to ensure the data quality. Legislation ensures, for the Philippines at least, we have the mandate of all credit providers. So utilities also give their data to us. Actually, as late as May, they've been sending out text blasts and emails to their phone clients, postpaid phone clients, telling them that they're already submitting data to the PCR so that phone utility data will now be visible to lenders. On data quality, it's really hard, and the workaround that we're trying to do is we're empowering our special accessing entities, the bureaus, as well as technology providers, technology service providers, to help these entities clean up their data. And in fact, we're encouraging these solutions providers to do a completely vertically integrated solution, loan origination systems, loan management systems, everything. Because what we found is that it's not really about malicious compliance. They have the data. The reason why the data is not clean is not because they're purposefully dirtying the data. It's just there's translation problems from one system to when they report it. So there are a lot of tech issues there, which optimistically I think we're solving bit by bit as we move forward in time, especially with the assistance of LLMs and AIs cleaning up some of the data. But you're right. It really isn't the specialty of the PCRs. That's why we're trying to involve private sector to help us make that case that, hey, clean up the data so that when we use that data for generating scores and products for you, they're actually accurate. So yeah, that's my answer for that.
That's very good. Thank you. Okay, we've got a few minutes left. Apart from clapping at the back, any questions from anybody? Any statements? Feel free. Feel free to. We'll do a vote in a minute. All those for Peter. All those for all of it. No, I'm only joking. Anybody wish to add anything? Or are you all too frightened if you're sitting next to the regulator? Is that right? Okay, go on, Dennis. I think.
It's interesting that you say that, because I get the feeling ICCR are scared of the regulator. Because the report was so inane and so careful not to make recommendations, careful not to assess one model. But Peter had no such restraint. He said it like it is, and it is like it is. I'm just wondering why. Why can't you be as direct and really convincing like Peter is, given his experience?
Well, some of us are behind closed doors, Dennis.
Maybe I can help.
But then we get into the World Bank and other things. I take your point entirely. Sometimes there needs to be a little bit more direct, and we do have those conversations, I can assure you. And in some ways, the benefit of the ICCR being both consisting of both public and private entities allows us to have that debate, and we do have it. But you are dealing. The ICCR is trying to provide global information, global sort of recommendations and standards. So, yes, I'll be the first to admit it, and it's going to go on record now because I'm being filmed. They do get watered down, and it is a frustration sometimes when you sit in a committee and forcefully make these arguments. But it's just, I'm afraid, it is where we are. But I think it's what we do in the private sector and involvement in the ICCR is to continually push these issues. So. What you do have, whereas you don't have with a normal standard setting body, which is just from a public sector perspective, is you can have people bring to it the issues. So I have fellow members of trade associations around the world who will bring issues to the table for them to be debated, and that sometimes results in some progress. But it's not just me, honestly.
Maybe I might be able to add something there to balance it up a little bit.
Yeah.
Certainly over the years, I've seen a lot of public officials trying to change the way they interact. And I think that's, the right way to go. They're opening their minds to different ways of doing things. And I think what we also need to be mindful of is, each jurisdiction is completely different. And I think that's what we don't acknowledge enough. You have political considerations, you've got cultural considerations, you've got infrastructure considerations, all of these things. And they're all different, except they're all the same. I know that sounds gobbledygook, but, it's not. It doesn't matter whether you're in the private sector or the public sector. There are risks, there are governance challenges. But, we tend to forget that what we are there for is to serve the public. That's what we're there for, whether it's public or private, and it's their data. And I think one of the things that I'm enjoying seeing now is the openness of regulators to work with the private sector to sit down and have open, meaningful discussions to say, if we work together, and as a regulator, I'll cut you some slack. They'll never say this out loud. Cut us a bit of slack and we can do this. If you let us do this and we have meaningful discussions around what data can be provided and in what format, how can we share it so that everybody gets data? Particularly around, you know, how do you measure financial inclusion? How do you develop policy without good data? How do you deal when you want a complete data set with those politically exposed individuals in any jurisdiction that don't want their data to be shared? That's the stuff you've got to deal with within your model and work out how you get that, because suddenly if you've got 10% of your data getting sifted through and not going because politically they don't want to be in the credit bureau, then, you know, you need real artificial intelligence then to build a synthetic model to cover all the crooks.
Yeah, I think so. Thank you, Peter. Okay, any more questions? Because we're running up to time and I want to get on to the other subject, which gives Mr. Martin a chance to say a few more words as well. Any other questions for anybody? I hope you found this useful, because it's, I mean, this part of what I mentioned at the beginning is this, the process here is sharing some of the work we do. It may not be ideal. I take that point on board in terms of outcome, but you know, I do think in this particular part of the world there is more opportunity to work together than there is in some of the more developed areas. So that is a positive. There is the there is an unlikely there's a consequence which isn't so favourable, which is sometimes it's seen as an easy route just to regulate it in, and I think what is incumbent upon all of us to try and make sure that people just, you know, that is an option. Regulators can take that option, but to make sure they have a visibility of other options which can work just as well. And therefore, they don't necessarily go straight down that route. They're open to discussion, and it can be, you know, it could be hopefully built in a way that will be able to be developed. Because I think the regulatory route, as we've already said, does have some quite debilitating roles sometimes. So that's enough for me. Thank you very much, gentlemen, for all of your input, and we'll now move on to the next session.